Guys, what is going on? Welcome to a Best Bet Trades trade update video. I know I haven't been super consistent with these videos. I've been in the process of moving and just life gets really busy, but I want to show you last night exactly how I made $3,100. A little bit longer of a trade, than I wanted to be in, right? Sometimes that happens. So volatility is not as high as you'd like it to be. You end up being in a trade longer than intended. But as long as things are going your way, you just sometimes have to be patient. That's just the way it is in this game, especially at nighttime, when I made this trade. So we're going to go through. I'm going to show you guys exactly what I had my eyes on, exactly why I got into this trade. Been trading a little bit of ES lately too, more often, just because ES is a little easier to hold. Remember, we scalp, we hold like it really. I'm trying to do these different strategies and different plays because I understand that everybody trades differently. You're never gonna have people trade the exact same. You're never gonna see the same thing. The market presents itself, many opportunities in a given day and night. So we'll go through how I did this $3,100 and why I was confident and had, the confidence that it was going to go to my price target. And it actually went higher. And I'm going to show you that. If I would have held 2 minutes longer, it would have probably been 15 grand that I made. But let's get right into it. So this is a NASDAQ, guys. And I know the chart's a little chaotic. I mark all my end dogs, which is a new day opening gap. My NWOGs, new week opening gap, which is basically the same as NDOG, except that's from Friday close to Monday or to Sunday night open, right? So it can get a little chaotic. That's why I don't have all the other indicators open right now. I usually trade with them too, the best bet trades indicators that you're going to get, but I did shut them off just for this video, just so you're not looking at a bunch of lines, wondering what the heck's going on with my chart. So this specific trade, guys, took place last night, all right? It was absolutely awesome. Ended up, sitting in here a little longer than intended. But again, I zoomed out and looked to the left, right? What did we have? Sorry, just trying to get it to the right size. So what did we have here? So obviously we had this area of liquidity right here, right? Meaning, obviously, you can see this green line here. This is a previous day high, and I'm going to show you the exact point I got into this trade so you guys can understand what I did and why I did it, okay? So we had this liquidity here, meaning this is probably where people got in long here and got stopped out, right? This is engineered liquidity that was created right here. You can see the wicks here. Created this huge wick of liquidity, dropped down, and what did we see happen here? We seen this initial pop up, right? And then we seen this sell off right here. This is the area that I got in, and the reason I got in right here is because we had this double bottom. You can see this double bottom. You can see this area of support. I knew right here that we had this fair value gap. Okay. We had this fair value gap right here. So I expected in my trade, I knew that the potential that it could come fill this fair value gap was significant. It had a lot of probability of coming down, selling off, filling this fair value gap, but it didn't do that. It actually, what we call respected the fair value gap and bounced right off of the top of it. And it ended up moving to the long side. Now, obviously, we had this pump right here, but if you look over to the left, this pump that we had here on NASDAQ, it never came in and actually filled this liquidity. So typically what happens, and if I'm losing you guys here, you can always go back and rewatch the video to understand what I'm saying. But typically when you have a liquidity box like this, an engineered liquidity box that's created, right? So you could literally take your, you could literally mark this up if you want. You can, TradingView has all the tools to do that. So we could just drag that over. This is your liquidity box. And then obviously most times it's going to get above the liquidity box and drop back down. But typically speaking, what happens is you'll watch price action typically comes into the liquidity box, has a pullback out of the liquidity again, and then makes its move back into the liquidity. That's 8 out of 10 times what happens, right? It's the same when you have a big fair value gap. It'll typically go into the fair value gap, have a rejection, come down, and then go back through and begin finishing that. So when we had this big pullback here, I accumulated a bunch of NASDAQ down here, rode this all the way up. I was up, significantly right here. But again, I didn't sell, I held, because not only are we trading at night, but I knew that the market was on a mission to grab this liquidity. We had already tested the liquidity box. Now, it would have been a different situation if it came up and just touched the liquidity box and then rejected. I wouldn't have been as excited about the trade or probably even entered the trade, but the fact that we already came in, began accumulating liquidity, began the accumulation stage, and then came out, I knew that we were going to wick back into the box. Now, this could have sold off a little bit more, but I was watching this fair value gap down here and seeing all these points were kind of bouncing in this general area. So I ended up holding this all the way up to here, to the top of this liquidity box. And obviously it went even higher. I ended up selling somewhere in this candle here, but I had the conviction that we were going to grab this entire amount of liquidity. Now, did it go against me a little bit here? I was still up, obviously, buying down here, but it was still, you'd be up $1,600 down to $900, so on and so forth. And they really drug this out here. It was really excruciating, honestly, watching it, but they really drug this out. And then finally we busted up into it. I sold in this area, and like I said, if I would have held a little bit longer, probably would have been a 15 grand night. But you can see exactly what it did. It came up, grabbed all of this liquidity, and then had a huge sell-off. So even if you didn't make it grabbing this liquidity, you could have jumped back. You could have jumped in here when it grabbed all the liquidity and rode this huge sell-off. And this would have actually been a way quicker trade. And then obviously you can see it came down, filled this fair value gap we were talking about back here. Look at where it bounced. It obviously wicked through, but fair value gaps, when we're looking at them, we're looking at price action bounce. We're looking at the bodies of the candle, right? You can have your wicks and things like that, but in order for a fair value gap to really be respected, we're looking for candle bodies to close within this fair value gap here, right? So if we draw a box on that, it's not a perfect box. Let's get that perfect. When we draw the box, we can look over here to the right on this fair value gap and see that price action closed within that fair value gap. Perfect confluence. All right, it's keeping its support. This would have been a great area to go long again. What'd it do? Came back up here, engineered new liquidity, right? Because this liquidity back here was already grabbed. This liquidity is created up here now for longs that got in and got clapped, that didn't see this liquidity here, and then it came back up, engineered more liquidity, right? Again, somebody that was long ended up getting stopped out, right? Created a bunch of liquidity up here, and then from there we had this huge sell-off, broke through this fair value gap, right, that we can see. We can see this candle here close below it, signifying we're going to go down further, and ended up dropping all the way down, grabbing the lows. There's many different ways you can trade, you guys. The market presents itself with many different, opportunities throughout the day. And again, just watching for these areas. They work every time. Liquidity to liquidity is probably one of the safest, most probable ways to trade. But again, each and every day is different. So that's where we're at. And look at it, grabbed all these lows, and what's it doing today so far? Came up, swept all these highs here that were created. Swept all these highs, right? This little wick here, grab that. All these areas, guys, they always say areas where you'd have your stop loss, that's where you should be buying, right? So that's where we're at today. Just wanted to show everybody that absolutely fun epic night that I had trading, and hopefully this video can give you some more capabilities with your trading and maybe educate you a little bit on liquidity levels and fair value gaps. And I will see you on the next video, guys. Thank you for tuning in.